All right, welcome to Talk Tickers. Today, we are diving deep into Astera Labs' Q3 earnings call. This one from November 4th was a huge deal for anyone watching the AI space, so let's get right to it. So let's just start with the headline number because, wow, 104%. That's the year-over-year revenue growth we're talking about. I mean, an absolute monster of a quarter. It really set a super bullish tone right out of the gate. Okay, so here's how we're going to break this down. First, we'll dig into those blowout numbers. Then, we'll look at why they beat, what's really driving this thing. After that, we'll look ahead at their guidance and a really interesting strategic move they're making. We'll check in on how the market reacted, and of course, we'll finish it all off with our take in the next call. All right, first up, the numbers. Look, to put it simply, this was just a clean, powerful beat. Top line, bottom line, no ambiguity here at all. You know, the real story here is just how big this beat was. Revenue, it came in at $230.6 million, just crushing the consensus of about $206.5 million. And then you look at the bottom line, right? Non-GAAP EPS hit 49 cents. That's a full 10 cents above what Wall Street was penciling in. Look, analysts were expecting a good quarter, for sure. But what Astera gave them was a great one. And it's not just that massive 104% year-over-year number. Get this, they also grew 20% from just the last quarter. That's what you really want to see. It tells you this isn't some one-off fluke, it's sustained acceleration. Okay, let's talk about profits. The company hit a record non-GAAP operating margin of 41.7%. That number shows some serious operating leverage. What does that mean? Well, it means as their revenue goes up, their profits are going up even faster. And that is the kind of financial health that investors absolutely love to see. So you're probably wondering, where did all this growth actually come from? Well, let's get into section 2. It turns out the upside came from 3 main product families. And yep, they are all plugged right into this massive AI infrastructure build-out. And what's really impressive here is how spread out the success was. This wasn't a one-trick pony kind of quarter. I mean, the revenue was split almost perfectly evenly across their Aries, Taurus, and Scorpio products. That's a sign of a really healthy, durable platform, not just a one-hit wonder. Okay, let's drill down a little bit. Their Aries PCIe 6 solutions, now more than 20% of their total revenue. The Taurus Ethernet modules, shipping in huge volumes for these 400 gig AI systems. And their Scorpio switches, well, they're not just ramping up, they're also locking in new design wins with multiple hyperscalers. It's really a perfect storm for AI connectivity. All right, so that's what happened. Now, let's look at what's coming next. Section 3 is all about their strong guidance for the future and a really important strategic move they're making. So for Q4, management is guiding for revenue between $245 and $253 million, with earnings around 51 cents a share. The key thing here, the middle of that revenue range is way above what analysts were expecting. That tells you management is feeling pretty confident that this momentum is going to continue right through the end of the year. But you know what? Maybe the biggest news from this call, especially for the long term, wasn't in the numbers at all. It was about a major strategic shift. Astera is looking beyond the world of copper wires and making a serious play for optical, light-based connections. They announced they're acquiring a company called aiXscale Photonics. Now, these guys are experts in something that's really hard to do, connecting tiny optical fibers directly onto silicon chips. This is super critical technology for the data centers of the future. And the CEO, Jitendra Mohan, he put it perfectly. He called it an important step within our long-term optical journey. So let's translate that for us investors, right? It means as these AI systems get bigger and bigger, they need to talk to each other over longer distances inside the data center. Astera is basically saying, we're going to own that connection. This is a huge long-term move. So let's recap. Great quarter, strong guidance, and a big strategic acquisition. The question is, how did the market take all this news? Let's check the pulse. Right after the numbers came out, the stock jumped about 6% in after hours. But then, by the close of the next trading day, it had cooled off to just a 1.5% gain. So what does that tell us? It seems like investors were constructive, but maybe a little watchful. They liked the results for sure, but weren't quite ready to chase it higher. But here's the really telling part, the volume. Almost 9.3 million shares traded hands the day after earnings. That's a huge spike from their average of about 6 million. So even though the price move was kind of muted, investor interest was just through the roof. You can bet a lot of big funds are moving in and out, repositioning themselves. Okay, time to put all the pieces together. Let's synthesize all this data and get to our forward-looking thesis. It's time for the next call. So, after digging through all the numbers, the management commentary, and the market's reaction, what's our final call in AL Lab? Our rating on Astera Labs is outperform. Here's why. First, for Q4, we fully expect them to meet and probably even beat the high end of their own guidance. I mean, these AI ramps are just too strong to hit the brakes right now. Now, could there be some bumps in the road in the short term? Sure, some volatility is possible. But the fundamental trend is just so positive. The big thing to watch for is the ramp of their Scorpio X series in 2026. That's the key catalyst. But at the end of the day, our whole thesis comes down to this. Astera is a leader in building the specific connectivity that rack-scale AI needs, linking thousands of chips together. That's a massive multi-year tailwind that we think is just going to keep pushing this stock higher. And that wraps up our analysis. As always, just a reminder that this is for informational purposes only. It is not financial advice.